Welcome back to Investing Talk podcast. We're here again to help you navigate the, well, often complex world of stocks and market trends. Today, we are taking a close look at BigBear.ai holdings. And the big question we're tackling, the central question really is now actually a good time to buy this stock? Before we get into the nitty-gritty, just a quick reminder, please hit that subscribe button if you haven't already, like this discussion if you find it helpful, and definitely leave a comment below. And hey, if there's a specific company you'd like us to analyze in a future session, let us know in those comments. So we've gathered quite a bit of information for this one: financials, market sentiment, potential catalysts coming up. Our goal today is to try and distill all of that into some clear, actionable insights for you.
Exactly. It's really about connecting those dots, isn't it? Seeing the full picture. We'll be looking at the company's fundamental health, what the technical charts might be telling us, recent news, and yeah, those potential future drivers.
Okay, let's get straight into it then. BigBear.ai holdings. They operate in, well, pretty competitive fields: data analytics, artificial intelligence, autonomous systems, high growth areas. First up, the numbers. Looking at their Q2 2025 results, some figures really jump out. Revenue was $32.47 million. That's actually an 18% decrease from the same quarter last year. And maybe even more striking, a net loss of $228.62 million in that quarter alone. Now, what's interesting here is why that loss was so big. A huge chunk, $70.64 million, was a goodwill impairment, which basically means they had to write down the value of assets they bought in the past, right?
That's right.
Because they aren't worth as much now.
That's exactly right. It's a non-cash charge, but it signals that a prior acquisition maybe hasn't panned out as expected.
And the other big piece was an increase in derivative liabilities tied to convertible notes. Those are like future obligations that could turn into stock.
Precisely. Potential future dilution or financial commitments down the line. So putting it together, what does this really say about the core business?
Well, it immediately raises a question, a pretty serious one, about the sustainability of their operations. While that goodwill thing is non-cash, the fact that they have these recurring substantial net losses, that points to negative earnings momentum. It suggests, underlying challenges in just executing their business plan, maybe limited pricing power too.
Okay, but here's where it gets interesting on the financial health side. BigBear.ai reported a massive increase in cash and cash equivalents. It jumped from about $50 million at the end of 2024 to almost $391 million by June 30th, 2025. That sounds great on the surface, doesn't it?
Yeah.
But how do they manage that huge leap?
Yeah, that's the critical question. And if you connect the dots, this increase wasn't from strong operational profits. Far from it. The main driver was a $300 million at-the-market equity offering, plus some warrant proceeds.
Ah, okay. So they sold a lot of new stock into the market. Exactly. An at-the-market offering lets them sell shares over time, and warrants give holders the option to buy shares later. So, yes, it significantly improved their liquidity, gave them breathing room, but it's a real double-edged sword. It implies they're relying on external financing, not internal profits, and it means potential future dilution for anyone holding the stock now. We also saw their total stockholders' equity turn positive, but again, that really just reflects issuing all that new stock.
So that cash injection has a catch. What about those derivative liabilities you mentioned? How serious are they?
They're definitely something to watch.
Yeah.
$193.2 million in total derivative liabilities, a big chunk tied to those 2029 convertible notes. It just signals, again, potential future dilution or liability they'll have to deal with. Combine that with the ongoing big losses and the reliance on selling stock for cash. It strongly suggests that cash generation from actual operations remains, well, poor.
So given all that, how do their claims of deep AI expertise stack up against, say, the sector leaders? The numbers seem kind of disconnected from the narrative sometimes.
That's a fascinating contrast, isn't it? They talk up their AI-driven analytics for government and commercial clients. But the declining revenue and these substantial losses, they indicate challenge to execution. It's hard to square those two things. It suggests a weakness compared to the leaders in the sector, the ones who are showing profit growth and generating cash organically. Big gap there.
Okay, let's switch gears then. Let's look at the chart, the technicals. For someone thinking about buying right now, what has the price action been telling us recently?
Well, looking at the past month or so, the stock's been trading between roughly $4.58 and $5.67. We've seen some support holding around that $4.50 level. Seems to be a bit of a floor recently. But, if that breaks, the next significant support level looks closer to $3.80. On the upside, there's definite resistance between $5.70 and $6. There's been pretty heavy selling pressure up in that zone since late August.
Okay, let's unpack that with some indicators. What are the moving averages saying about the trend?
Right, so the 50-day moving average is currently around $5.20, and the longer-term 200-day moving average is higher, up around $5.90. The fact that the stock price has been stuck below both of those key averages, that's generally a bearish technical signal. It points to a downtrend.
What about momentum indicators like RSI or MACD?
Good question. The Relative Strength Index, the RSI, it's around 41 right now, so it's heading towards oversold territory, but it's not at an extreme level, like below 30, where you might expect a bounce just based on that. And the MACD indicator, which tracks momentum shifts, it's actually been negative since mid-August. We haven't seen any kind of bullish reversal signal from the MACD yet. Volatility also remains pretty high, lots of wide trading ranges day to day.
So putting all those technical signals together, what's the sort of short-term takeaway?
Well, if you connect all that, these technical indicators collectively point towards, I'd say, ongoing uncertainty and likely continued near-term downside pressure. It just doesn't look like a strong setup for short-term traders right now based purely on the chart.
Okay, moving beyond the balance sheets and the charts. What about recent news and just the general sentiment around BigBear.ai? We mentioned that $300 million capital raise. How did the market really take that news?
Well, it's interesting. That raise had a real dual impact, didn't it? On one hand, yes, it substantially increased their liquidity, gave them cash runway. That's positive. But the unavoidable flip side is the significant dilution for existing shareholders. Their slice of the pie got smaller.
Right, it's always that trade-off.
Exactly. Investors have to weigh the benefit of that stronger cash position against the cost of that dilution. And we also can't forget that $70.64 million goodwill impairment charge from Q2. That also sends a signal, a downward adjustment on the value of stuff they bought before.
Any major analyst upgrades or downgrades recently? Anything shifting the Wall Street view?
As of early September, looking through the sources, no. No recent major upgrades or downgrades reported from the big brokers. So kind of a holding pattern there.
And what about insider activity? Are the folks running the company, the directors and officers, buying or selling? That's always telling.
It is. And this raises an important question about insider conviction, doesn't it? We saw multiple filings between May and August this year showing proposed sales and changes in ownership by directors and officers. Now, insiders sell for many reasons, but consistent selling like that can often be read by the market as maybe a lack of confidence in the near-term prospects.
Yeah, not usually seen as a bullish sign. What about social media buzz or retail sentiment?
It seems to have remained pretty negative to neutral. We haven't seen any major surges in retail interest or, speculative hype driving the stock lately. It's been fairly quiet on that front.
Okay, so it definitely sounds like there are some significant headwinds blowing. But are there any potential catalysts on the horizon? Anything coming up that could maybe change the story for BigBear.ai?
Absolutely. Looking ahead, there are definitely things to watch over the next, say, 3 months. We should get Q3 preliminary earnings around September 23rd. That'll be an early peak. Then the full Q3 2025 earnings report and the investor presentation, that's usually around mid-November, maybe November 15th. Investors will be laser focused on seeing if they've won any new contracts and getting clear guidance on how recent federal legislation might boost revenue.
And what about broader market stuff? Or government actions?
Well, October 11th could be interesting. There might be a major AI and defense ETF rebalancing. If BigBear.ai gets more weight, that could bring in institutional money. Also, around October 31st, we expect federal agencies' holiday spend procurement reports. That timing can sometimes mean new government contracts pop up. And the CEO, Kevin McAleenan, he specifically mentioned legislative tailwinds from something called the One Big Beautiful Bill.
Right, I remember reading about that. Huge funding potential.
Huge. It's expected to funnel over $170 billion to Homeland Security and $150 billion to defense technology. Given BigBear.ai's focus on national security AI, that could be a very significant tailwind for them if they can capture some of that spend.
Okay, so that ties into institutional interest too, right?
Exactly. We'll also see the institutional holdings filings, the 13Fs, for Q3 around December 1st. If those filings show big funds increasing their positions, that could act as another positive catalyst, a signal of confidence from the big players.
Beyond those scheduled things, any rumors or more speculative catalysts floating around?
What's fascinating here is some of the industry chatter. There's speculation about potential strategic partnerships, maybe with top U.S. defense contractors. That could be big. There's also talk they might use their new cash pile for M&A, buying up smaller AI analytics or cybersecurity firms.
Accelerate growth through acquisition?
Potentially. And there's also talk about maybe getting set-aside contracts from new AI legislation or even getting included in broader tech or AI indices by year-end. That could bring in passive investment flows.
Okay. Now, we have to look at the flip side. What are the major risks here? What do investors absolutely need to keep front of mind with BigBear.ai?
Yeah, this raises the important question about the inherent risks, and there's several key ones. First, those recurring large losses and the negative operating cash flow. That's a fundamental business model risk. They need to prove they can be profitable. Second, that significant dilution risk we talked about. Their heavy reliance on selling stock to raise cash is a major concern for existing shareholders. Third, their customer base is highly concentrated in the government sector. That makes their revenue really vulnerable to policy shifts, funding changes, federal budget cycles, things largely outside their control.
Competition, sector risks.
Oh, yeah. Intense competition in the AI market. They're up against established tech giants with deep pockets and nimble startups. It's a tough space. Plus, as a high-growth but currently unprofitable company, BigBear.ai is just more vulnerable to general tech sector volatility and wider macroeconomic shocks. Things like interest rate hikes hit companies like this harder.
Okay. So, we've covered a lot of ground. Financials, technicals, news, sentiment, catalysts, risks. Which brings us right back to where we started. Is now a good time to buy BigBear.ai holdings? What's the verdict based on everything we've discussed?
Well, if we connect this all back to the bigger picture,
Hmm.
the overall assessment from our sources, honestly, points to a pretty challenging outlook, particularly for putting new money in right now. That financial deterioration, the recurring big losses, the falling revenue, that's a really significant concern. It overshadows a lot of the potential.
And the technical picture reinforces that.
It does. The short-term technical weakness, with
Mhm.
the stock below those key moving averages, the bearish chart setup, it just doesn't signal a strong buying opportunity from a charting perspective. The trend is not your friend here currently.
And that dilution combined with the insider selling.
Yet the heavy dilution from that $300 million offering, plus the pattern of insider selling. It signals a lack of strong conviction from those who know the company best. And that really raises an important question for you, the potential investor. If the insiders are selling, why should you be buying right now? What do they potentially see that the market doesn't?
So, bottom line, for someone thinking short-term trade versus long-term hold, what's the summary?
Okay, for short-term trading, it just doesn't look attractive. You've got the downtrend, the high volatility, no clear positive technical signals. Too risky. For long-term investment, it has to be classified as very high risk at this point. The company really must demonstrate sustainable revenue growth, start showing consistent profitability, and prove it has a clear competitive advantage before you could seriously consider it for a long-term portfolio. It's definitely a show-me story right now.
That was a really thorough look at BigBear.ai holdings. We've definitely dug into the details, the financials, the chart signals, the news impact, and what might lie ahead, both good and bad. Ultimately, understanding a company means looking at all these different pieces, doesn't it? For BigBear.ai, you hopefully now have a much clearer picture of both the potential opportunities, like those legislative tailwinds and the cash they raised, but also the very considerable challenges, the losses, the dilution, that intense competition.
And maybe my parting thought for you listening is this. Given all these mixed signals, you've got the cash injection, but also the losses, the potential government contracts, but also the dilution risk. What would be the single most important factor or piece of data you personally would need to see from BigBear.ai in their next quarterly report to make you reconsider its investment potential? Keep that question in mind as you continue your own research and thinking.
That's an excellent point to ponder. Really sharp question. Thank you all for joining us on Investing Talk podcast. We genuinely hope this analysis helps you feel more informed and maybe a bit more confident in your own investment decisions. Don't forget to subscribe, like the discussion, and leave us that comment, especially if there's a company you want us to tackle next. Until next time, happy investing.